This weekend, the latest edition of the Bloomberg CFO Briefing newsletter. You can sign up for that at bloomberg.com/CFO Briefing. The newsletter comes out on Sundays and it shares insight from the world's chief financial officers. This Sunday's issue focuses on how CFOs are preparing for the potential of new tariffs after the November 5th election, and it features Kim Henriksson, chief financial officer at the Swedish investment firm EQT Partners. Kim joins us now along with Bloomberg News senior editor Nina Trentman, who's here in a studio. Kim joins us from Philadelphia. Nina, first up, just give us an idea of what you wanted to cover in the new Bloomberg CFO briefing that does come out on Sundays.
Yeah, you pointed it out. We'll be talking about tariffs and how companies are preparing for that. Of course, 10 days out from the election on Sunday. I know that it's a big topic for CFOs, specifically those that have long and sprawling supply chains all around the world. And we spoke to Kim this week earlier. He was in New York for the company's first Investor Day. And yeah, so we'll cover that as well.
Well, Kim, come on in on it. You joined us there out in Philadelphia. Tariffs is certainly a big subject on the campaign trail. And to be fair, Donald Trump in his first term certainly laid out some tariffs and they carried over into the Biden administration. And then again, we're hearing a lot of conversations. Certainly a Trump second term would broaden out those tariffs potentially. How are you thinking about them, and how are you thinking about them as you talk to some of your investing clients?
Yeah, hi. Thanks for having me on. And thanks for the question. I guess, well, first of all, what we are a fairly global firm by now. We have 312 companies across the globe with significant presence in Europe and Asia. So this would be sort of one topic amongst many that our portfolio companies would be thinking about. And secondly, I would say that we would. Our job is to sort of invest our clients' capital across cycles and regardless of what the political spectrum, what part of the political spectrum is in sort of power just then, and I think that will continue regardless of the election result and regardless of the tariffs.
That's interesting to hear, because this is looking like to be, if Trump does win, an administration that has a lot of differences and a clear agenda, and one that's not necessarily, according to a lot of experts, not so great for U.S. deficit, not so great for companies that produce outside of the United States, could have some inflationary concerns as well. Is this time different, or is this time the same, Kim, as other administrations?
Well, I think that you also need to look at the bigger picture and what we and some of our peers are investing behind are huge secular trends, like on the healthcare side, or the digitalization of society, or energy transition and things like this. They will not change based on tariff. Maybe the pace of change will change, but the direction will be the same. And I think we need to sort of lift the discussion to that direction, and that's sort of how we would typically approach these things.
Kim, how do you think about deal making? We talked about the outlook for M&A, for exits and IPOs. Tell us a little more about that.
Yeah, again, what we think about is we try to be prepared, and clearly exits is very, very high on the agenda for the private equity community more broadly, because we haven't delivered enough capital back to our clients in the last couple of years, what we can do is to have good companies that are ready for exits when the markets are amenable to that, and in some parts they may be, but not fully yet. I'd say that the IPO market still is a bit flaky, and M&A markets are typically correlated to IPO.
How do you think about the declining interest rates that we're seeing in the U.S. and other parts of the world? Sort of, will that make things easier for private equity firms?
It will, yes, it will. I think that the way we are thinking about it is that, especially the sort of zero and negative interest rate environment that we had for some time, that is the weird period in history of interest rates. If you have a 5%-ish interest rate, that is absolutely normal and something. I mean, it's like business school example of interest rates, and something that our business model has to be able to cope with and is able to cope with. Then in a declining interest rate environment, maybe you get some further sort of tailwinds. But even without that, I think the business model of private equity is pretty solid.
Hey, Kim, you are here in the United States. You were initially based over in Stockholm, and I'm assuming trying to help build out the business that you do, certainly here in the United States and in U.S. investments. Having said that, when you look around the globe, you guys can invest anywhere. Where do you see the best opportunities? Is it the U.S. market? No matter what happens come November in terms of the election outcome, is the U.S. your favorite place in terms of finding opportunities? How do you feel about Europe with all of the geopolitical unrest there? Just walk us through some of that.
Yes. Well, certainly U.S. is a hugely important market for us, and I guess me just having moved here is a signal of that. But we have been here for many years. We have 450 employees at the firm here, and we just had our 30th year anniversary down in here in Philadelphia. So U.S. is hugely important. From an investing point of view, we will continue to expand and deploy capital in the U.S. It is one of the markets that, regardless of the election outcome, will be at the top of the list. I'd say that Asia is the other major opportunity over the next few years, and probably beyond that. And within Asia, in particularly, we are quite excited, continue to be excited about India and also Japan.
Kim, 20 seconds left, just fundraising right now. Harder or easier than it was a year ago?
On the margin, I'd say somewhat easier, but still not out of the woods. And the key to that would be the exits.
Yeah, totally makes sense. And that's certainly been one of the big stories over, I feel like, the last few years. Great to get time with you. Thank you so much. Kim Henriksen, of course, Chief Financial Officer at the PE firm EQT Partners, joining us there from Philadelphia. And, of course, our own Bloomberg News Senior Editor Nina Trentman joining us right here in our Bloomberg Interactive Broker Studio. Check out the Bloomberg CFO Briefing newsletter. You can find that at bloomberg.com/CFO Briefing. Hey.